Good morning, everyone, and Happy New Year. What is today? Thursday. It is January 2nd, so it's sort of the first business day or first market day of the year. Really excited about this year. It's going to be interesting. After a huge gain last year, S&P up almost 30%. S&P 500 doing very well last year, and again, as I've written about, if you look at historical numbers, a lot of times when you have a year with double-digit returns like we had last year, especially that strong, 30%, the following year you tend to have an up market. Surprisingly, you would think maybe with such a big gain that you might have a down year the next year, but historically speaking, for the most part, a lot of years you have a follow-on year that could be another double-digit return year. There are some other sort of extenuating circumstances that I think we have to face this year with the Fed tapering and interest rates rising and all the associated things that go along with what the Fed is doing. That probably will make it difficult. The average economist out there thinks we're only going to gain about 6% on the S&P this year. Could be better, but I would say it's going to be a stock picker's market more than just a buy and hold type of market. Even within last year, you look at 30% over the year. Had you used a buy and hold strategy, yes, you would have made 30% if you owned the S&P for the entire year. But if you look back to October, the market dipped down to around 1650 at the beginning of October. So you basically, if you were to buy that dip, which I happened to buy, you basically captured almost 200 points, or roughly half of the total year's return. Nearly half again, just from the beginning of October to the end of the year. So even with such a strong up year, although the buy and hold strategy would have worked, had you been looking to do something more like what I do, which is to look for opportunities within the market when there are corrections and things like that, and to raise cash when I'm uncomfortable with evaluations, as I am right now, there are plenty of opportunities to make really good returns while reducing the overall risk of the portfolio, and that's really what I look to do. So it was a good year for me. I did underperform the market somewhat, but over the longer term, my model portfolio or portfolios for clients have done exceptionally well, and they've well outperformed the market. So I look going into 2014 for much more of my type of market, if you will, a market where you're going to have to pick your spots and you're going to need to raise cash when markets are overvalued. I would look for there to be a correction sometime in the first quarter. The Fed is going to begin tapering this month, and so we should see some kind of correction, and I think there'll be a better opportunity to put cash to work at better prices, better valuations, and a better overall level for the market. Overall, we had gold down 28%, some of the other things, other asset classes. Bonds obviously not performing all that well, with the 10-year Treasury now around 3%. And finally, local real estate, or California real estate, did very well price-wise in the first half of 2013. However, in the second half, pretty much flat. We didn't see any price appreciation, really, if you look at the second half of the year. Going into 2014, most of the industry organizations or economists that follow real estate are looking for prices to be up somewhat in 2014, but not nearly as much as they were in the first half of 2013. I think that's going to be difficult with the rising interest rate environment. Affordability's getting higher all the time, or harder, if you will, and with rising rates, I think it's going to be really difficult for prices to continue to go up. I think more inventory will come on the market because prices are higher, fewer people are upside down, that kind of thing. So we'll keep an eye on that, but if you compare all the different asset classes, and I have written about this if you want to check my blog, it looks to me like stocks are going to be the place to be, unless interest rates rise too quickly or inflation gets out of control, but there's no sign of any of that right now. So stocks are going to be the place to be, but I think you're going to need to pick your spots.